It's gone 1 o'clock. Welcome everybody, and I declare this meeting of the Audit and Risk Committee open. I'll call upon the COO to lead us in a karakia, please.
Kia ora. Tuaki ronga, tuaki raro, tuaki roto, tuaki waho, tuaki ti hawe tangata, ka rongo ti poi, ka rongo ti ao, huie, takia.
Thank you. Leave of absence for this meeting has previously been granted to the Mayor, and we have an apology for lateness from the Deputy Mayor Bryant. So I recommend we accept those. We need to, we don't need to, we do? Okay, do I have a mover and seconder for those, please? Councillor Mackenzie, Mr. McGlynn, all those in favour say aye. Against, carried, thank you. Moving on to declarations of interest. Are there any new declarations that any committee members wish to make at this time? I'll take that as a no. And we'll then move on to the confirmation of the minutes for the meeting on the 16th of March. To confirm they're a true and correct record. Does anyone have any corrections or other amendments they want to make to those minutes? I'll take that as a no. Can we have a mover and seconder? Councillor Butler, Councillor Mackenzie, all those in favour say aye. Against, carried, thank you. We're going to, we're going to have to jump around a bit today, unfortunately. So we need to move into confidential session straight away and deal with a number of items because of availability of people. So can I have a mover and seconder for the resolution to move into PX at this time? Councillor Walker, Graham McGlynn, all those in favour say aye. Against, carried. Thank you very much. Thank you. We are now at item 9.1 of the open agenda. Whose hands are we in?
To you, Mr. Chair. So I'm just going to give a short summary highlighting some key points, and then we are going to hand over to John Mackey, our Audit Director, as a couple of the papers are from Audit New Zealand. So we've attached the audit plan for 2023, which is pretty much as expected, highlighting some new reporting standards and changes in water regulations that we're well aware of, and we have them in our work plans. We have asked that we receive the audit plan at an earlier stage in the year, which I'm sure they'll work towards next year. Now, we've got a significant judgment each year. We maybe remember from previous years around whether we need to get valuations. There's been significant inflation in the past couple of years, and our buildings valuation in particular was about 18%. But because we've got $2 billion worth of assets and buildings is only about 10% of that portfolio, it's not material to us as an organisation overall, and we've decided that we will stick with our 3-yearly revaluation cycle, mainly because valuations are just so expensive in terms of cost and resource. But we'll obviously take into account inflation in our insurance and also in our annual long-term planning process. We've got an interim audit starting on the 27th of June, which is basically the planning process for the audit, and hopefully some sample testing to make it ready for year end. And the final audit is going to be 4 weeks starting on the 18th of September, which will be a good time for adoption on the 26th of October, I think we're scheduled for. We've resolved the audit fee negotiations for 2022, there was a typo in the report on section 5.2, where we had said that the audit fee for the annual report 2023 was 151,000. That was the audit fee for 2022. The audit fee letter for 2023 hasn't yet been received, and we are hoping for that obviously very shortly, as it's a significant cost to us. We touch upon the auditor review, and do you want to just mention the last couple of points? I'll just hand over to Briley for the non-financial performance section.
So just bringing forward a report that's gone to council already on how we're tracking performance measures that can be measured at the 6-month point, and that performance is tracking better than it has in previous years.
So now we would like to introduce John Mackey, and he can maybe talk about the audit plan, and then if there's any questions, we can take them or John can.
Thank you. Welcome, John.
Thank you. I just had to unmute. So yes, Charlotte's outlined most of the key points regarding the audit plan. I would just point out it's a transition year. We've come from having councils and Crown entities having a 31 December balance date, now moving back to 31 October. So we've planned and taken steps to achieve that, but we couldn't catch up on what we would want to ideally do in terms of when our planning times were and when the interim audit was held. So we agree that in an ideal world, we should have the audit plan to you by March, and we should be performing the interim earlier. So that's our plan for next year, but we're in a transition year. In the UK, they're going to take 2 to 3 years to catch up. So us doing it in 1 year, I think is reasonable. Right. In terms of Charlotte touched on the water regulations, so that's a second year in a row that process and setting the standards and coordinating it has not been handled well from Wellington. So yeah, it's just creating work for both councils and for auditors. Now, I'll move into the plan itself, so I'm talking from my notes. Accounting for joint ventures and joint operations on page 17 of the agenda, page 5 of the audit plan, is where you have for-profit entities being accounted for by public benefit entities. You get difference in accounting policies. Those need to be adjusted out. You'll see in the unadjusted misstatements in the report to the council on last year's audit, that wasn't done. The amounts are there. So that's that issue. 3 Waters reform wasn't touched on, but the implications are significant. Hopefully, the government won't pass the legislation regarding transfer of ownership before 30th of June, because if it does, then it's got significant accounting implications, because you potentially would have to count for them as assets held for transfer and get into valuation issues. So I don't think any of us want to go there. So if that doesn't happen, then we're likely to get into the situation where the council discloses the uncertainty regarding the transfer, and we would put in, as we did last year, an emphasis of matter in the audit report to refer to that note about the uncertainty in the financial statements. On page 18 of the agenda, it's got information technology review. That is the implications of International Auditing Standard 315, which has been revised, which requires us as auditors to perform significantly more work than we have previously. So it's outlined there in broad terms what we're doing, and yeah, later in the section on page 11. So if there's questions on that, I'm happy to answer that. Right. And the first time adoption of FRS 48 service performance reporting. Councils do service performance reporting better than most entities. The structure set up under the Local Government Act for the long-term plan, community outcomes, how you contribute to those. That process provides a sound basis for setting your performance reporting framework, but there is disclosures that that standard requires. I have provided a summary of the requirements to management, and there will be a checklist that's being produced that I will forward on as soon as that's available. So those were the key things I wanted to mention about the audit plan. So I'm happy to take any questions.
Thank you, John. Do committee members have any questions of John regarding his audit plan document? Councillor Mackenzie.
Thank you, through the chair. John, I maybe just have one in relation to FRS 48. So will this require you to review the appropriateness or existence of the intervention logic, which has led to the choice of performance measures leading towards the achievement of community outcomes?
It does involve us making judgments on that. So part of that process happens when we audit the long-term plan, because we're looking at how, the overall planning process, what your strategic objectives are, how you're intending to contribute to the achievement of outcomes, and then how you set levels of service through setting performance targets.
Okay, so it's something that you've been doing already.
Yes.
John, can I ask, with the auditing of the performance measures and the materiality, do you not consider the performance measures as a total like you do with the financial statements, but consider them individually along these material ones that you've identified?
Those materiality is set for the individual measures, because there's no way of actually saying what a combined materiality is. It's you either meet your drinking water standards or you don't. Yes.
Yes. So if we don't meet our drinking water standards and everything else is fine, would that result in a modified opinion?
Yes, there is the potential for that to be an except for.
Okay, thank you. Any other questions? No? Oh, sorry.
Just the issue of the amount of resealing of roads, or stealing of roads, and the links that I'm just wondering if how relevant that is, and whether or not we should be looking at the amount of cycleways that are now being, the length of cycleway that's being put down, because we have a strategy for active transport, and if we're going to be keeping in step with that movement in that direction. It's just a thought.
Right, so at the moment, we are applying essentially for Tasman District Council the mandatory measures. Most of the significant performance measures we're looking at are mandatory. And with roading, we're looking at the smoothness of the road and the fatality, injuries and fatalities. But if it becomes a significant part of your strategy and that's a key issue that your community should be informed of, then we would look at that as a material measure, but we haven't identified that at the moment.
Any other questions of John? No? So we've got the resolution. Oh, yeah, so we've got a resolution, excuse me, to receive the external audit matters report. If there are no more questions, I have a mover and seconder for this, please. Thank you, Councillor McKenzie. Thank you, Deputy Mayor Bryant. Sorry. All those in favour say aye. Against? Carried. Thank you very much. Is that the end of?
That's it. Now we're going to move into
Okay. Thank you, John. No doubt we'll see you again soon. So we're now going to move back into confidential PX. So we need a resolution to that effect. Do I have a mover and seconder? Thank you. All those in favour say aye. Against? Carried. Thank you. Welcome again to the open agenda. So 9.2, Mike, the Treasury Risk Management Policy.
Through you, Mr. Chair. Councillors, this will look somewhat familiar with you because you dealt with the investment policy that is part of this policy back in March. Now, that investment policy was updated in response to a significant review by the Enterprise Committee. And in that review, the policy was both widened and given more depth, including what your portfolio should aspire to and what the for example, the level of reinvestment versus the level of release of income in order to reduce council rates. So it wasn't intending to traverse that part of the policy today. This update is our regular 3-yearly update that comes before each long-term plan. So this makes it possible for staff to have a level of assurance about what our Treasury policy will be, and that is one of the foundation documents for the long-term plan. This policy is likely to be updated as a result of where you land the plane when it comes to your financial strategy in due course. For example, if you were to increase the debt limit to $350 million from $250 million, or you used a different measure than a static debt limit, the policy would be revised for that. So the limits that are in place in this policy that you're looking at today are the ones that are applicable now and are carried over from the current policy. I'll run very quickly through the changes, key changes. They're in section 5 of your report. We've updated, obviously, the report for changes in titles and legislative references. We have changed the long-term funding objective from favourable margins to acceptable margins The reason being that our long-term funding comes through the LGFA. And the LGFA always provided favourable margins compared to the banks, but we are typically not borrowing through a banking environment. So we're saying the margins that we are paying for our borrowing need to be acceptable. We have updated guarantees and contingent liabilities. That's just to reflect the uncalled capital structure that is being used for the holding company that's holding the port and the airport. When it comes to borrowing limits, we have aligned the definitions that are used in the policy with the definitions that are used by the LGFA. That's a technical update to ensure that we don't calculate two sets of limits in reports. We have looked at the borrowing mechanisms, and we've updated that to show a clear preference for green, sustainable and climate funding from the LGFA. It's been a clear theme running through council for some time that clean and green is the approach you want to take. And the LGFA in recent times has made some products available which council will qualify for that actually tick the box in terms of green and sustainable. It's also likely to become a focus of the LGFA as more of their bondholders and the likes want to see that their investments are in green and sustainable areas. I've updated internal borrowing. This reflects that within the enterprise activity, money is borrowed and lent between the individual activities. It doesn't affect external borrowing, but within enterprise, the core is a forestry activity and funds are being lent from the forestry activity to other activities, and it just needed to be recognised in the policy. The risk recognition, this is a PwC recommended update. We've flowed it through to interest rate control limits and the likes in that section. So that's aligning our policy with practice, and you'll see those changes flowed through in due course to the next Treasury report. It's been a minor update to our approach to fixed rate hedges beyond 15 years. We typically don't take fixed rate hedges beyond 15 years. And there can be particular terms applied by the bank where they're able to do a reset. In the liquidity funding risk control limits, we've picked up a PwC recommendation about those maturity profile bands. So that's just adjusting our bands in light of current practice. The ETS scheme, we've expanded the ETS scheme section. In the past, we've never had to turn our mind to unencumbered credits. When they were worth $1.18 or $2 each, the ones that we had on our books were probably not of material value. But all of a sudden, when they're $86, or they've now dropped to 55 and they might go to 156, they suddenly become quite a $1 million item, or in fact, our case, a $3 million item on our balance sheet. And so we need to make sure that we report them appropriately. And I've been asked to include reporting on what's happening within the ETS market in future Treasury reports. A couple of minor changes, obviously operational risks. We no longer accept cheques, bills of exchange or promissory notes for those who remember promissory notes. And that's just really an update of the policy to reflect current banking practice. They are probably all the matters I would draw to your attention. So in short, this is our regular 3-yearly update. It's been, the policy's been reviewed, consequential changes have been put in terms of PwC advice as our Treasury advisors, and I am quite happy to take questions.
Questions? Mm-hmm. Councillor McKenzie.
No questions. Happy to move the resolution.
Can I just
Mr.
clarify
Chair?
before we do move the resolution? On page 98, the recommendation is for option 1. Under advantage and disadvantage, it's incomplete.
You are correct. So the advantages, it will make a policy review timeline, and it will meet the advice that's been provided both by the Enterprise Committee around improvement and advisors. I would see no disadvantages in accepting policy changes.
Councillor Walker.
Through you, Chair. Can you just clarify, when you talked about forestry, are we using the word forestry as opposed to the enterprise committee? I'm a bit confused, sorry.
So the enterprise committee is assigned a range of assets to look after. Forestry is one of those activities that comes under the enterprise committee. When I talk about the enterprise activity, I'm talking about the activity as a whole. So that's holiday parks, commercial buildings, forestry. People typically talk about forestry, and I probably fall into that trap because forestry is the largest single item in there, about $86 million worth of forestry we've got. So it's the largest big asset, and it's also the one that has been driving the majority of the returns that we're having to consider how we manage those returns. So in terms of the emissions trading scheme, the credits are come into council's possession via the forestry activity, and they sit within the enterprise portfolio. Does that make more sense? Yeah.
So, any more questions? Just taking back to the resolution that Councillor Mackenzie's already moved. Do we need 3 now? Point 3.
So for the benefit of staff, councillors looking into the sun, 3 authorises the chair of the Audit and Risk Committee in conjunction with myself to make minor editorial amendments to the risk management policy. In case when we review that policy, we pick up a typo in there. That was the intention of that. I am comfortable if the mover was to remove 3. Typically, I could cover off any minor amendments made in the report to council.
Okay, let's remove 3. And so we've already got a mover. Do we have a seconder for points 1 and 2? Thank you very much. All those in favour say aye. Against? Carried. Thank you very much. Which brings us on to the very patient Riley.
Right, good afternoon. So this report is the working assumptions for the long-term plan. So the long-term plans are required to have a set of assumptions that that are the basis for developing the plan, and these will get reviewed as part of the audit. So at this stage, we've developed working assumptions just so that staff across council are all working on a consistent basis. So there's quite a few placeholders. There's information we're still waiting on. An earlier set of assumptions was circulated to councillors end of March. Since that version, there's been a change in the 3 waters assumption. That's a moving feast. And some clarification of the sea level rise assumption as well. But yeah, otherwise happy to take any questions or feedback.
Questions? Councillor Mackenzie.
Yeah, the only one I wondered about under the economic environment, that negative growth in Tasman in 2024. I'm just wondering what your views are on that. I mean, we've got the highest growth in the country currently. Maybe the country might go into negative, but are they really still forecasting that Tasman will?
So those forecasts were just based on what the chair, on the national forecasts, but I noticed recently Treasury have updated their forecasts, are actually quite looking more positive than this. So I expect this will be reviewed, and we can again review the relationship, I guess, between Tasman's growth and the New Zealand growth projections.
Just in relation to the growth assumption, and by using dot consulting, the census figures unlikely to be available, would they be separate to the
Through the chair, they're unlikely to be available in time. They're not expected until mid next year, and then projections based on those are always a lag as well. So it's still be based, yeah. So they're still based on census trends between the 2001 and 2018 census, but they have updated the data, the more recent data in terms of births, deaths. So they've updated their fertility and mortality assumptions. But the net migration is the key assumption, and that depends on census data.
They typically for outlying communities have shown negative growth, and if we do that again, it's just going to irritate people that were going down that path when they know there's been quite a lot of growth.
So through the chair and the growth model, looking at that township level, we do incorporate the building consent, resource consent trends as well, and also we're looking more for enabling capacity as well, which is a higher amount than demand.
Right. That may help. Thank you. Great.
Well, the meeting's been on. Tony Alexander's just put through his premium view for today, and he's updated the statistics for growth that were updated last week, he indicates, and suggesting population growth 23 to 48 for Tasman at 14%. So it was 16 or something in the previous set of figures.
Who's that from? Did you say Peter Alexander?
Well, yeah, but Stats New Zealand projections. It's come from Tony Alexander's team view. He's also an accountant in Christchurch.
Yeah, that's what I was told.
I have a concern. I've been to 2 economic briefings in the last 2 weeks. One saying we're going into a recession and one saying we definitely aren't. I'm really concerned about at what point do we say what's happening and have to prepare or start preparing the LTP on that basis.
I guess this one does come in later in the piece, but it's a lot of our models it doesn't feed in directly to it. It's more the wider context.
But they're 2 totally different or opposite positions, and underpinning that will be things like population growth, immigration, inflation, interest rates, which will be fairly important to the formulation of a view of what's going to happen in the next 10 years. I just find this very difficult to work through, really, at the moment. And then we've got an election. Just
Yeah.
Just put
So,
the icing on the cake.
Yeah, so all the assumptions we do, we try to highlight that degree of uncertainty, and the what ifs. It's a different, it's a lower or higher scenario.
So would you accept that at the moment this is probably the most uncertain time to be preparing an LTP?
In my experience of LTPs, it's the most uncertainty I've known.
Councillor Walker.
If I may, through you, Chair, what are the implications if we get it horribly wrong? If our predictions of our population growth is way out, what risk does that place us at as a council?
So in terms of the growth projection, so we if it's higher than we project, so in the annual plan process, we can review the timing of infrastructure projects. We can review the timing of zoning plan changes if needed. But again, we tend to, because we have to provide capacity above demand as well. There's a little bit of mitigation there, but it's really something we have to review on a regular basis.
Right.
A wise former colleague of mine once said, every projection is wrong. The question is by how much.
Yes. I think that certainly applies today. But it makes it really difficult to prepare an LTP, I think, in this environment. Really does. I agree with the comment that it's the most uncertain time I can remember since they've been preparing LTPs.
Can I just add, and I get it can be reviewed in the annual plan, but that's at a huge cost. That's at a staffing cost, and that's at a community cost. And I know that that's our go-to if it needs to be done. But I just don't feel comfortable if we aren't targeting, and this isn't a reflection on you at all. I just find the whole getting statistics on the census so slow that it actually hinders us. And in fact, I mean, we should be leveraging off those figures. And if we can't have them, it's quite compromising.
I agree. What's the last, the deadline for having to lock in these assumptions?
In terms of the growth side of things, I would say late towards the end of the year, but really there's a lot of it feeds into it's the Three Waters infrastructure side of things now. So that's we're kind of erred on the high side of what that program was anyway.
Right.
The Three Waters infrastructure projections aren't going to be greatly hit, I would have thought, by population growth if we work on the assumption that they are disappearing to another person's problem. We don't have a particularly long runway till it disappears, so that might be a plus. Bigger one, I think, is probably what happens in the hustings at October, and then we have to wait to find out what the new version of Three Waters is going to be. Or should I say affordable water? I'm 2 months out of date in the branding.
I suppose this is where it comes down to you have to settle on a set of assumptions. They're disclosed and the plan is prepared on those. But the importance of readers reading those assumptions when they consider the results. Mike.
Sorry, Mr. Chair, I think it's also worth remembering, even in an annual plan year, it's only if we had a significant departure when that assumption was causing a challenge for service delivery in that year. And of course, while we're planning for 10 years, we've got an infrastructure strategy out 30 years. In fact, in 3 years' time, you get to have another review and to update those assumptions. So in effect, while the assumptions flow through to the whole LTP, the critical years are probably years 1 to 4. And those assumptions are probably slightly more accurate than the assumptions heading out in year 6, 7, 8, 9, 10. If someone could tell me what the ETS credit price will be in year 5, I'd take that on board.
Mr. Chair, if I may, if someone could tell me what Saturday night's lotto results are, I'd be very grateful.
Yeah, well, I think all we can do is carry on and just do the best job we can under the circumstances. Yep. Are there any questions from committee members? If not, we've got a resolution that we receive the assumptions for the LTP report.
Yeah, move, Mr. Chairman.
Thank you very much. Do I have a second? Thank you, Graham. All those in favour say aye. Aye. To the contrary, carried. Thank you very much. That brings us to the end of the agenda, and I'll again ask the COO to lead us in a karakia, please.
Kia ora. Kia hora tu marino, ki whakapapa, whanamu tu moana, aroha atu, araha mai, tēnā tātou, tēnā tātou, tēnā tātou, tātou.
Thank you very much. I declare the meeting closed and thank you for your attendance and participation.
Thank you.